Hey guys, this is a market update and we have to talk about the CPI figure that came out yesterday, which was even higher than expected. Inflation is off the charts, but what does the market actually think about this now and going forward? And how is that going to affect the price of Bitcoin and altcoins? I'm going to think about that, going to think about how the market is pricing in what is going to happen over the next 6 months, because even though the figure was very high, 9.1%, it actually, the market is thinking that that's essentially peak. That is what the market is saying right now. They may be wrong, but they're saying that they think that over the next 6-12 months, that the rate is going to start coming down again. And that's what's being priced in right now, which is maybe part of the reason why a lot of people were asking, why did Bitcoin actually go up yesterday? Well, it came off. There was a big sell-off on the news, but then later in the afternoon, it actually rallied. So what is going on and how is the market and the bond market affecting this? We're going to look at that. So first of all, what we can see is with bond yields, the yield curve is now inverted. And that means that the bond market is predicting a big recession essentially in the next 6 to 12 months. Obviously, we're basically in a recession now, but you can see that the market is saying that the Fed is going to raise and raise and raise, and that inflation is actually going to come down a lot. That's what the market is pricing in, and that is why Bitcoin is going to react with that as well, because Bitcoin is not a stock. We'll get on to what stocks are going to do, but Bitcoin is not a stock and it has no earnings. It's a commodity in itself, and so it's going to react in tandem with what rates are. Now, it's also going to act in tandem with the NASDAQ because it has a correlation there, and so there's two different factors that affect the price of Bitcoin, not just earnings, because it doesn't have any. And so you have to look at this. So when we go back to Bitcoin, what is it going to do here? Well, let's have a look at the trend. This is the day chart here. We are very clearly still in a downtrend, and we are not really breaking any resistance barriers. So you have to look at that. If we look at the 4 hour right here, we can see again the 200 period moving average, and this is a 4 hour moving average. You can see we're actually coming up to meet this. So we have over the next couple of days quite an important level, because what's been happening on this 4 hour chart, as you can see, every time that we've gone through to the resistance, we have sold off. So, is that going to happen again, or are we actually going to break through at this point? So we're actually going to meet this in the next few days. So watch out for that in terms of what happens. How is it going to react though? Let's look at yields. You can see this is the 2-year yield on the US 2-year, right? So the US Treasury 2-year, and you can see that essentially this has gone from 0 and it's pricing in now all of the rate hikes that are coming from the Fed. In fact, the market actually believes at this point that the Fed could actually raise by 1 full basis point next meeting. You can see that right here and how it's changed. So for the July meeting, July 27th, you're starting to see a few banks come out and say, can they raise 1%? Now this has gone up from that 75 basis points. You can see over the last few weeks, the market was right here, 89.5% of the market thinking that they would raise 75 basis points to bring us up to this level. But that has changed over the last day. You can see now we are actually going over to 77.4%. You can see that's changed dramatically from 1 day ago to now. The market is now essentially all of them, 77%, saying, I think they're going to raise 1% at the next meeting. Why not, right? Because those inflation figures were so high. However, this is priced in, right? This is getting priced in, and now you can see the US 10-year, right? So the US 2-year, you can see this at 3.1%. If you look at the US 10-year, it's actually below. So we're going to go for US 10-year yields and see that this is actually below the 3%. 2.9%, right? So the yield curve is inverted, saying that rates are going to be high short term and then they're going to come off. The bond market believes that the Fed is going to raise rates substantially, spark that big recession, and then when the recession comes towards the end of this year, the official recession, we're kind of in one now already, but when that happens, when the demand really shows, wow, like all of the commodities have fallen off, inflation is down, they think that will ease. And so the market looks out 6 to 12 months in anticipation of that. Now, because of that, and you're seeing these rate expectations come down over the kind of long or the medium term, right, for the 10-year, Bitcoin is going to react to that as well, because Bitcoin does react to yields and the cost of money as well. Definitely check out Bybit as well. If you are a trader, they'll give you a deposit bonus in your account up to $4,000. If you trade futures, click on the link in the description and deposit some crypto in there, and they'll give you up to $4,000 in your futures trading account. Here are rate expectations. It's the 5-year break-evens. And so this is a way we can see what the market thinks inflation is going to be. And you can see it's just coming down, 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 right? So there can be a 1% move. The terminal rate is the important thing. Rates have already gone up. It doesn't really matter what the Fed does. It matters what the terminal rate is before start coming down again. The market thinks that the Fed is just going to raise and do all of it can, spark the recession, and then start easing again. So you can see that the market is thinking inflation is going to start coming down from here. How does that affect Bitcoin, and how does the stock market going into a recession actually affect Bitcoin? I don't think it's positive. How can it be positive? But we're starting to see earnings revisions to the downside coming. This is not positive in my opinion for Bitcoin, even though Bitcoin isn't priced on its earnings. The nominal buyer of Bitcoin is retail, and if stocks are not doing well, that means recession's coming, people losing their jobs, and so there's just less money to go around to invest in something like Bitcoin. But what we're seeing here is that earnings revisions are going to come down a lot. You can see the price action yesterday, where it went up on this, is difficult to truly analyze because moves with liquidity stuck at its lowest level seen in years obviously can't really be analyzed too much. Liquidity is low, and so these moves aren't really pricing in what the bulk of the market is doing. Potentially just sitting on their hands and not investing, staying in cash, staying in dollars, because the dollar index is the highest it's been in years, right? So maybe they're just low volumes. You can see sell side analysts, okay, these are analysts that give price estimates, some forward price estimates, are scrambling to get ahead of Q2 earnings. Over the last 5 days, they've downgraded more than 500 names on a net basis. What does this mean? Well, basically now we're getting into earnings season, and all of these stocks are going to downgrade their earnings because what they think of a recession is coming. As earnings come down, then the price of the stock market may come down as well. Here is some research on this. So the price to earnings ratio back in the bull run was way over 20 across the whole market, right? Which is typically quite high. Usually it's around 16 times earnings. We've actually come down, the stock market's come down, and now we're at a level of around 15 times earnings. The market right now is priced accordingly. So it's normally priced considering earnings that have come in the past. The problem is that during a recession, forward earnings estimates come down around 20%, and we've barely got any at this point. Right? So what does that mean? Well, there's two things that can happen. You can see Goldman. They think 2023 estimates for earnings are too high. They have to come down. Two things can happen here. Those earnings estimates can come down, but prices remain the same, meaning that the price to earnings ratio gets higher. Or why would that happen? It wouldn't in a recession. Or earnings estimates come down, and it keeps a 15 times multiple, and then earnings come down, and so the price comes down because that multiple stays the same. So stocks come down in tandem with that. I do not believe that that is bullish for Bitcoin, even though there are no earnings, and it looks like in the next 6 to 12 months, rates will be getting lower, which is good for Bitcoin. So you have those two kind of contradictory factors with the price of Bitcoin that are trying to fight it out right now. If we are to see any rallies in Bitcoin and altcoins as well because of that, it is because the market is pricing in rate cuts. The price right now, that's been priced in already. The market looks out 6 to 12 months and says, well, if rates are coming down, that's an easier environment for something like Bitcoin because interest rates are lower, the economy gets eased a little bit, and the Fed won't be raising as much. And so that is why you may see Bitcoin rally a little bit here and there because of the bond market is telling us that. The problem is the bond market may be wrong. Someone like Bill Ackman, as you can see here, now Bill Ackman is a slug, and so you have to take everything he says with a pinch of salt because he talks his own trades, and so you have to read in between the psyops. However, he came out with this Twitter and was basically saying that, as we can see here, the market appears to assume that the Fed will act as it did in the last 3 recessions, and that means that they essentially cut extremely quickly. They just cut rates extremely quickly to ease the economy, and that's massively bullish for stocks and hugely bullish for Bitcoin, and that is what the market is pricing in right now. The market appears to assume that the Fed will act as it did in the last 3 recessions by immediately easing when the economy goes into recession. While this seems intuitive, the lessons from the stagflationary periods of the 70s and 80s suggest different policy response. He is probably short bonds and so wants bonds to remain higher in terms of their yields, because if he's short bonds, he wants the rates to remain higher, he can make his money. So read in between the psyops here, but I hate comparing now to the past. In the 70s, the economy was totally different. We had none of the tech we have today. We have none of the way that we can react to these things today. So I'm not going to compare anything to the past. I don't like that. But he at least thinks that the rate cuts that the bond market is pricing in now are wrong. He thinks that, and he thinks bond yields will remain higher. Prices will remain sold off for a bit longer, keeping the recession in, digging it in. And that's obviously not bullish for stocks and Bitcoin, because as we're looking, price to earnings multiples have to come down, potentially the rates have to come down. And then obviously we're looking at Bitcoin as well. And essentially this is, a little bit like property, in that if everything's great and people are doing well, the price will go up. And in a general sense, if people aren't, then you can't really be bullish on Bitcoin. So they are the kind of two factors that are playing out right now for the price of BTC. So how do we play this? Because obviously you can't predict what's going to happen in the tail end of this year. Are the Fed just going to cut straight away and really ease the economy? Or are they not, because they're just so afraid of inflation? Inflation's coming down. We can see this in the commodity indexes. So take this for what it is. You can look at broad-based commodity index. So we want the Bloomberg Commodity Index futures. See, this has come off so much. Okay, so when looking forward, we're saying, is inflation going to carry on? Probably not. Look at the commodity index. This is a broad-based commodity index showing that prices are not continuing up. So looking forward, that's why the bond market is pricing in these cuts, because it just simply sees this and says there's no reason to stay elevated in those rates. So how does this feed in to Bitcoin and altcoins? If we assume the recession is going to keep prices low, then just look at the fundamentals of some altcoins. Most altcoins don't make any money, and so why would you invest in them unless they have a good business? But Token Terminal gives you all of this for free, right? So you can see the price to earnings ratio. Ethereum has a 100 price to earnings ratio. I don't believe that there is any monetary premium in Ethereum. I don't believe it's money, but I believe it is a protocol that makes a lot of money. 100 times earnings, that could still come down. You can do this fundamental analysis quite easily. Looking at other altcoins, you're seeing some that actually appear fairly decent value, especially compared to what they were in the past. For example, we have Aave here trading at 72 times price to earnings. The thing with these and looking at their price to earnings is that their earnings can easily double or triple within a few months when people flood back in to actually using these protocols. We have to look at all the insolvencies that are happening and realize that, when volumes pick up, Uniswap will double its kind of, earnings. Doesn't make earnings, it all goes to liquidity providers, but you get what I'm saying, right? So Aave could easily double its earnings. The TVL on there could literally double or triple, and then that earnings, the price to earnings ratio starts to come down to like 25, 30 times, which is, not expensive even compared to stocks. These protocols make money. And so you have to look at these as opportunities to say, look, don't know where the price is going to go, but some of these opportunities are here. And during a recession, if prices get lower, you just average into actually protocols and altcoins that are making money. If you want to talk more about that, definitely come into the private Discord server. It's part of the crypto course. You can see the crypto course here. We've got over 200 videos now on, analyzing fundamentally what protocols are making money, putting ratios on that so you can invest in them, putting a portfolio together, a huge trading section as well, futures and options trading and passive income, and obviously the private groups, which I'm in and have, tons of groups as well. So if you want to check that out, I'll leave that linked in the description. Very interesting times. The market is changing a lot, but there are opportunities in a recession to get protocols that actually make money a lot cheaper. So that's how I'm looking at that anyway. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.